Good morning. Lovely, beautiful morning out of Welcome Bay. My name is Jan Viljoen and you on 30 Minutes with Jan. We are live from Welcome Bay in Tauranga and I'm a financial advisor. I help people with insurances such as life cover, disability, as well as vehicle insurance. As part of our full financial planning, we see that our clients receive wills. This morning we're talking about future-proofing yourself in New Zealand. Now, this may be a strange concept, future-proofing, and the question may be, what does future-proofing mean? Future-proofing for me basically just means that what do you need to do to set yourself up to have a better future, a wonderful future, a brilliant future in New Zealand. That's quite important. It doesn't help you arrive here and you're struggling and you keep on struggling. So on that note, if you have any questions, please drop your questions. We will see them popping up. Even if you are on my personal page, I will also see your questions pop up there, and then we can try and answer some of them. Please just know immigration questions. I'm not an immigration advisor. That is Vanita's job there. In the past year, in 2020, we've seen major changes in the world. And I've spoken to a lot of people the past few days. Some of them have been doing good. Some of them are struggling. Some of them are getting better. Some of them are doing absolutely brilliant. And what defines these people from each other? What defines them and their future proofing? How is their future going to look that is so different from each other? What are they doing differently? As I always said, the first price, and somewhere I printed out the golden ticket that I wanted to show you guys. For me, the golden ticket in New Zealand is residence. There's just no other way around this. So you arrive here with your work visa, and then you get residence, and PR will follow, and then citizenship. That is, and I'm always saying that again, that must be the only reason why you are in New Zealand, and that is to receive citizenship at the end of the day. Okay. Let me say this again. This must be the only reason why you come to New Zealand is to get citizenship at the end of the day. So you must have a pathway to citizenship or a pathway to residence, if you want to call it that way. That you can ask an immigration advisor all about. They will tell you exactly how it works if you have a good immigration advisor. I've seen some dodgy ones out there as well, so sorry about that. Once you've received residence, that's your golden ticket. That is what opens New Zealand up to you. I've seen guys on residence working for a boss, earning good money. They've moved between companies because now they are allowed to do that. With residence, they can really pop out. They can go wherever they want to go. I've also seen guys with residence opening their own companies and doing extremely well. I just spoke to somebody the other day who's earning $400,000 a year on his own company. So it's not that it's not attainable. It is out there. That is happening. So that is happening. So the next thing you've got to do once you've received residence, or as soon as you are here, or as soon as you hear what I'm saying to you, you should start saving for your house deposit. This is quite important. You need at least 10% in this country for a house deposit. Now, if you look at house prices, in Invercargill, they go around $350,000 up to Auckland, where you can easily pay $1 million for a basic type of house. My suggestions would be for a first house, buy a new build. I know in some areas they could be more expensive than the older type of houses, except if you are good with these things. If you are a handyman, buy a second-hand house or buy an older house and fix that up. I mean, that could be real value for money. But if you are going to take in tradies and they've got to come and repair everything for you, that could very soon spiral out, or your cost could really go like I say, above what you were planning to do. So keep that in mind. If you need to do repairs on a house, you probably need more than the 10% deposit, so because you'll have to pay these guys cash or by FPOS or internet transfer. The bank won't pay for all the repairs on the houses, and some of the houses or some of the banks won't accept these houses as well. We are soon going to do a series of seminars across the country. It will probably be only from January next year onwards about buying your own house. It's quite important that you guys have been flooded with a lot of information out there, and a lot of that is just run-of-the-mill information. You can walk into your bank and get that information, but we're busy teaming up with certain role players in this country, and we are going to bring these guys to you. We're going to bring them to you and let them talk to you regarding buying that first house. And for me, the biggest thing you got to do is start saving. Guys, get yourself into this, I would say, into this rut of saving a small bit every week. Start off small. Every week, save something. And save the same amount of money every week. So in your first week, let's say you can only save $50. That's great. Next week, don't go to the movies and only save $2. Put $50 down first, and if there's money left over, then you go to the movies. And the other thing is, there's a lot of stuff available in this country that you could never buy in South Africa. And a lot of stuff, you can go to Kmart or one of these places, the warehouse, wherever, and buy something for $5. What's on my desk lying around for $5? I don't have anything on my desk now for $5, but it's stuff that you normally could not buy in South Africa. And $5 doesn't sound that much, but $5 very quickly add up to a lot of dollars. So if you are buying a random stuff, think about it. Think about it before you just buy random stuff that you don't need. I've got a few boxes full of random stuff that I don't need, and that's all money that I could have saved towards my first house. In New Zealand, if you can retire with your house fully paid, the house that you're living in, even if it's a 2-bedroom house or a 1-bedroom house at the ocean or somewhere like that, it's only you and the wife or you and the partner, whatever. If you're married, you just have a partner. If it's only 2 of you, you don't need a big place. You don't need 5 bedrooms. I've got a 4-bed now because I've got kids staying with me and friends coming very over soon. But once I reach 65 or 70, I'm going to downscale drastically. I promise you, drastically. Something that's really small, but I just have 1 extra bedroom to clean up with. If you retire in New Zealand and your own house, the house that you're living in is fully paid, and you have about 4, listen to me, if you have 4 rental properties, now this may sound like pie in the sky. How can I get 4 rental properties? It's easy, you buy them. It's like that. This is the seminars that we are going to bring around to you, and it will be free of charge. I'm not going to make money out of the fact that we're going to give you valuable information. We are going to bring the seminars around, telling you how to buy your first house, and telling you how to buy your next and your next and your next house, because that is important. I don't only want you to buy your first house. Your first house is very important to me, that you buy that, because that's your own place. And let's be quite frank, this morning, I'm living in my own house for about 3 months now. I'm paying it's about $140 a week more than where I rented. Okay, this might sound like a lot of money, but this is my own house. This house gains, or the equity in this house grows by about 17% per year. With the rental, the other person's house that I paid off grew by 17% per year. So whatever I've got here, it's growing by 17% per year. I'm repaying that. I've already started saving for my next house because I really want to buy a next house. That's very, very important. Whichever you look at it, if you've got 4 houses in New Zealand, you can actually retire. 4 houses that brings you, even if they only bring you in $500 a week, that's $2,000 a week that you bring in as a rental property. But these houses have to be paid off. They have to be fully paid, because then that rental property coming into your pocket is yours. It's nobody else's. All right. That is the house deposit side. You need at least 10%. Start saving, guys. Start saving. Really. You only need 10%. If the banks come to the point where you've got your 10% and the bank says, nah, they need 15% or something like that, we've got companies in the background that are willing to borrow you that other 5%. I promise you, I've had a meeting with these people from Hamilton the other day. They're willing to borrow you on top of whatever the bank gives you, another 5%, another 7%, sometimes even 10%. The banks really need that. But if you buy a new built house, you've got a 10-year guarantee on the house. So anything goes wrong, you phone up and say, up, come fix. The roof is leaking, whatever. It's not your problem. It's the builder's problem. You've got a 10-year guarantee on the new build. New build only need 10% deposit. And they start off, new builds in our area start off from about 600, 650. I know that's a lot of money. That's $65,000 you basically got to save, and then about another $3,000 for the transfer of the property in your name, those type of smaller things that is cash money that you need to. So about $68,000 you can get away with and buy your own house, and then you are moving into that house and it's yours. According to the banks, you only need to stay in that house for 6 months and then you can rent it out. Do you catch where I'm going? I'm going to a second house very soon. All right. One thing, you guys, I find with most of my clients, they got credit card debt in this country. I don't know why. Stay away from credit cards. That is a bad thing. It's a big minus against your name once you go to the bank and ask for a loan or mortgage. Few ways to start saving. Okay. I'm a financial advisor. I'm not allowed in this country currently. This is until next year. I'm not allowed to give you investment advice. I'm not giving you investment advice this morning. I'm just telling you the certain things that is out there. On my side, I've got a company that can help you with unit trust. If you've got a set amount per month, I think they want $100 per month or something as a minimum into a unit trust. Unit trust is very much the same as you had in South Africa. Unit trust, a lot of different shares thrown in together, and these guys trade the shares for you. This is a higher risk type of investment. And then KiwiSaver. Let's quickly recap what is KiwiSaver. KiwiSaver is a way that governments help you to save money. Okay, governments help you to save money in the following ways. If you add about $100 per month to your KiwiSaver, that will leave you bringing it about $1,200 per year. Government will give you $521 on that. You've got to be a resident. There's no other way around it. You've got to be a resident. Yep, I know some visit or some work visa holders has got KiwiSaver, but you're actually not allowed to have that. IRD will find that out and they will prepay the money back into your account. They won't penalize you. They won't fine you. Once you're a resident, the government will pay this $521 into that KiwiSaver. And if you have got KiwiSaver for 3 years, after 3 years, you can withdraw most of that money into your first house. So think about this. You're saving $1,200 because that's the minimum. And I'm going to challenge you and say you can do that. Don't go below that because that'll be a total waste of time because government won't give you the full subsidy. Once you've got your $1,200 per year in there, or per month, $1,200 per year, government is going to give you another $521. That's about a 50%. There's no other investment that grows by 50%. Sadly enough, if you put in $2,000 or $10,000 into your KiwiSaver, government won't top that up with more than $521. But if you go below the $1,200 per year, they will lower the amount that they give you. So that's the one way to smart save. That's really, I'm talking about smart save. That's a smart way to save. The growth on that is guaranteed. $521 per year. There's your growth. There you go. There's a few other things as well where you can save in this country, either in the bank at 0. whatever interest rate, which means it's not a lot of money, growing with that. And if you are even slightly inclined to know a bit more about shares and those type of things, there's a program called Shareacies. I'll share the link a bit later with you guys. Keep in mind that is shares. Shares are up high, up low, all over. If you don't know what you're doing, you're probably going to burn your fingers. I myself save in share receipts because I just feel that's the way that I'm comfortable with my money, and that is money that I can lose up to a certain percentage of that over a period of time if worst happens, like COVID. If you were in share receipts before COVID, your whole portfolio will probably be still down by about 25%. Um, I was lucky enough to just get into the short where the markets turned around that, and I even chucked in my GST money into there. So we made a nice little profit of about something like 14% over the period of time. Uh, let's see if there's any questions down here. Oh yeah, somebody's saying good luck with tradies. So many take your money and don't deliver, especially builders. Give you saver for your first time. What does the government give you? Yeah, the government gives you $521 every year. Government has also got certain grants available that they give you. I think it's $5,000 per person as for a new build. They've got certain things or criteria on that. I think the house must be below $550,000. Well, I've looked into that and I couldn't find a house either in Hamilton, Auckland, or Tauranga that's below 550,000, which is the new build. This is absolutely ridiculous. I even went to the bigger guys. I'm not going to go and call names now, but I had to sit down with a lot of the builders down here and said, we are South Africans and we want houses below that. They all laughed at me. They all said, the market's not there. They can build a house at 550. Yes, they can, and they can deliver it. But why would they accept 550 for that if they can get much more? So it's all about the demand, and the demand out there in New Zealand currently is very high. That's why house prices has been going up and up and up. I've actually got a $50 bet on with somebody in the estate where I live, and they said that house prices will fall by 5% by the end of the year. So I'm waiting for my $50. It's a question of time. Let me see where the time runs to. What else did I want to talk to you guys about? KiwiSaver is really a good product to have. But sadly enough, that's probably that's probably the only savings product that New Zealand really have. And New Zealand hasn't got a culture of saving at all. They've got a culture of living it all out. There is some people down here that's making a lot of money and it's got nothing to show at the end of the month or the week. There's people out here making a lot of money and it's got a heck of a lot to show as well. And then the other flip side of the coin is there's people that's just earning a basic salary. It's also got a lot to show. I'm working with a few clients at the current stage, and these guys, all South Africans, been here a few years, and they've accrued quite a few houses. So that's quite interesting to see that somebody who's just got the right mindset can do this, and that is for me. That's quite important that I keep on looking at these people because they are inspiration to me. They are inspiration to me, and I know it's possible that you can do that. You can really go around and accrue houses or get more and more houses as time goes on, because you can alleviate or you can use the accrued growth in your house to buy the next one. It's as easy as that. But that will show you on the seminars we are planning. So I don't want to go and run through that. Comment saying, Jan, rich people don't spend money. That is right. Rich people spend the bank's money. Keep that in mind. You don't need to be rich to spend the bank's money. I'm spending the bank's money and I'm not rich. So at night I sleep well. Bank manager probably don't sleep well. Comment here, Jan, is it not cheaper to buy a stand and build your own house? I've looked at that. I probably looked at it the wrong way around. I looked at it as buying or building a house for me. So I've got certain criteria. I need offices from the home and so on. And that quickly skyrocketed to very near to $1 million. And I also wanted a specific stand because I wanted to have a good view and so on. So suddenly the price just went crazy. Stand wise, you're looking at about anything between $300,000 and $500,000. House building also very much in the $400,000 area. You could probably get a cheaper stand and take a cheaper house if that's only an investment house and you never plan to live in that. People that rent houses from you normally aren't very worried about the view they have because they know they're going to be there for a year or 2 years. So you don't need to really provide them with a grand view just for them to rent from you. Then it could probably be cheaper, but keep this in mind as well. If you build your own house, it's not that easy in this country. There's so many rules and regulations. There's so many red tape. There's so many boxes that need to be ticked at the end of the day. That could be a absolutely nightmare if that is not really into or what you are into or used to. It's not like South Africa. You get somebody from the street and they start mixing the cement there, and then you guys start building walls. I mean, I've done that in South Africa. I've renovated my own houses without plans and stuff like that. And nobody asked the question. Even the day that I sold it, nobody asked the question. But the one problem becomes here if you do stuff on your house and it's what they call non-consented, then you need to get consent. And this consent can cost you a heck of a lot of money because council has to come out. You have to get an engineer or an electrician or this or that. And the council has got to come out and tick all the boxes to say this place is safe or this place is according to the rules. And most banks won't lend you money or anybody else money. So if you want to sell your house that's unconsented building on there, then you probably will struggle to get that sold because the banks won't lend money on a house that's not consented because they know probably if something goes wrong, whoever bought the house will just walk away and say, let it be. They had this housing development here in Tauranga. I don't know if you guys heard about that. That started slipping even after council ticked all the boxes. Council came out and ticked all the boxes, and then this houses started slipping. And there's a massive story about that. And council had to pay out several $1 million just to compensate these people for boxes that they tick. So council is very strict on the boxes they tick as they make money out of this. This is at the end of the day, this is a money game. They make money out of it. This costs you money. Building your own house could be cheaper, but I doubt if it's that much cheaper. You also got to keep in mind if you build your first house, this is how I made the sums. Perhaps the sums will make sense to you. You build your first house, you're going to pay rent for at least another year. At $600 odd, that accrues to quite a few, about $30,000. That's roughly about $30,000. It takes a year to build a house. That is what they told us. They gave us that in writing. It takes a year to build a house in New Zealand due to all the consents and due to all the red tape and everything else. So that's another year down the line. Another year that you haven't built your portfolio, but somebody else is building your portfolio for you while you're paying rent. So keep that in mind. Another thing that I see people are doing here, and I don't say go and pop out and do that, everybody. If you got your deposit, you are willing to stick out this 1 year of building your own house. People are starting to build, so they are starting to build. Let's say the build will take them 12 months. Down in month 11 or 1 month before it's finished. 1 month before it's finished, they put that house in the market. And there's a lot of people who wants to buy a new build but doesn't want to wait the 12-month period. So these people are willing to wait the 1 month because that's about how long it takes for them to give up their rental and to move out, blah, blah, blah. They are willing to wait this 1 month and they're willing to pay you an extra $50,000 or $60,000. So if you are building a portfolio and you've got the time and you're younger than me, that's probably one way to make a few more bucks in the long run. And yeah, it doesn't take that much to build a house. Your 10%, you will still need your 10% for building a house. You can arrange with the banks that you only pay back the interest in the first year. So you'll probably pay back interest for the first 11 months only. And you sell the house off, you make 50,000 more. That's 50,000 more towards a deposit. Think about that. And then that 1 year or that 11 months that you have been renting, you will used to having saved towards your deposit. Keep on saving because that all adds up to the end of the day. So you've got another 11 months of saving. Chuck that into the deposit that you are going to get back from the bank. Chuck that into the pot with the 50,000 that you've made off the selling of your new build, and use that as your next deposit. So every time the amount that you got to outlay becomes less and less. All right. That's just my thoughts on building your own house or buying one that's already been built. So, but there's merit to both sides. It could possibly be really good for you on both sides. All right. On the other side, we've got a Christmas party on Christmas Day down in Tauranga in Thai Park. You are all welcome. You are all welcome, guys. And if there's any of my clients this morning listening to me, I do hope you guys are still listening to me. So if you are out there and you are coming to Tauranga in either December or January, and you're one of my clients, feel free to pop me an email or WhatsApp, a text, or call a few days before you come, and let's arrange something out on the boat. Let's take a little cruise out, and I can show you what the town is all about. So, Christmas picnic, remember that. Then the ladies' tea that we are sponsoring in 2 weeks' time. There's less than about, I think it's about 15 seats left. So seats are flying there. Also, if you're a client of mine, you'll receive 50% back off your booking. The booking is only $20. I mean, you're going to have a whole tea. You're going to have 3 speakers telling you a bit more about life in New Zealand, telling you a bit more how to cope with life in New Zealand. And this is so sadly only for the ladies. Sadly only for the ladies, guys. And I've had many requests of the guys saying they want to come through and drop their wives and then we can go fishing. But I was roped into work that morning there. Oh, sorry, the wife is awake. She said there's only 10 seats available for the ladies' morning, and my dear, morning is spelled MOR, on the 14th of November. That's in 2 weeks' time. So only 10 seats available, guys and girls. This is the one event in Tauranga that you do not want to miss. You do not want to miss. We will be having one of these, and this is a promise I make. We will be having one of these in Hamilton. We will be having one of these in Auckland next year, but that will only be next year. So, that's a promise I make. Another question that came up: what is the payments on a house mortgage of 600,000 per week or per month? That'll probably be about $750. That's what you would be looking at. Remember, everybody gets their own, they themselves assessed at the bank or get themselves assessed at by your mortgage advisor. They will assess you, and that is the interest rate that you will pay. And if you are borrowing below 20%, you will be paying a little bit more on that excess amount. So, all right, 10 seats available. Mortgages. That's your next thing after you've got your golden ticket of residence. And then once again, stay away from credit cards. I'll pop you the link to share receipts. Go and have a look on what's going on there. And remember, I can't give you advice on share receipts. I'm currently not allowed to do that according to the New Zealand laws that they've changed. But I think from March onwards, we will be in the position to give you some advice on that. And I promise you, I will be giving you some advice on that because I want you to save. I want you to buy your first house as soon as possible. It is possible in New Zealand, and it is really, really possible in New Zealand to retire without worries. You don't want to retire and still worry where your money is going to come from. I know government is paying a handsome pension, handsome for any part of the world, but it's still a pension. It still doesn't allow you to go overseas. It's a livable pension. Don't get me wrong, it's a livable pension, but you will probably need your own savings as well. So also, KiwiSaver, as soon as you can, as soon as you have got residence, if you just have your KiwiSaver through your work, I think it's time you talk to me. I spoke to quite a few clients this past 2 weeks, and most of them have just taken out KiwiSaver through work, and it's just lying there. They don't really know what's going on. They don't know where the KiwiSaver is really invested in. So that is what I do. I will look and see and give you feedback on exactly what it's earning. Is it worth it? Isn't it worth it? Because sometimes it's not worth it. If you are just in the normal funds, like most of the companies just like to add you to the normal fund, there is no real growth in that. All right. It looks like our time has come and gone this morning. Thanks to everybody who listened, and thanks to everybody who made a few comments. Guys, I hope this helped you at all. And if you need any insurance advice or any insurance for the future, please get hold of me. Talk to me. I am there. I'm just a call away. We do a heck of a lot of work on Zoom, on all these wonderful video platforms that COVID has taught us to use. So Thanks for everybody, guys and girls. Stay well. Have a lovely morning. See you all. Bye bye.